Hello, good morning everybody. You're with Martin Benef, Chief Account Executive and Trading Analyst GDMFX. Welcome to today's European Session Market Outlook. Starting with the North American markets from yesterday, the industrial Dow Jones went 7 points down, along with the high-tech Nasdaq 14 points down. The Dixie Index down to 95.19 from 95.22, a little movement there. Initial and continuing jobless claims, 1,000 better than expected and 32,000 worse than expected. Personal income month on month, as expected, and market PMI composite 1.4 lower than previous. Market services PMI as well, 1.9 weaker than the expected. The dollar weakened slightly against most of its rivals on Thursday, but remained on track to finish the week with modest gains. A good tip here would be that Barclays says that the greenback will be a good long-term bullish position within the next 6 months. Next week, on Wednesday, ISM manufacturing PMI, and on Thursday, the biggest day for our traders, the unemployment rate along with the non-farm payrolls. Moving along to EU markets, the DAX 30 60 points up, along with the French CAC 40 10 points up. German IFO business climate and assessment and expectations all came out worse than expected, and then the previous, but all above the 100 mark. Without a deal at the weekend to unlock frozen aid, Greece, which has received 2 bailouts worth 240 billion euros since 2010, is set to default on a crucial repayment to the International Monetary Fund next Tuesday. That could trigger a bank run and capital controls, possibly setting Athens to a path out of the Eurozone and undermining the founding principle that membership is irrevocable. This Saturday, there's going to be a decisive meeting for Greece's future. On Monday, we are going to look at the inflation data in Germany. Tuesday, again for Germany, unemployment rates, along with the inflation CPI reports for the European zone, along with an unemployment rate in the European zone. On Thursday next week, German retail sales and the ECB monetary policy meeting accounts. Moving to the British fronts, the UK markets, the FTSE 100 gained 30 points movement yesterday and closed at 6,746 points. The 10-year gilt yields were at 2.144% yesterday, slight improvement there. CBI, Distributive Trade Survey, realized month-on-month actual 29, the previous was 51. Retail sales growth slows but remains above average according to the CPI survey. The Confederation of British Industry, which is the CPI, retail sales balance fell from 51 in May, a 5-month high, to 29 in June as shoppers bought fewer groceries. The clothes sector, the goods such as flowers, watches and jewelry were among the best performing. Although numbers are low, it is expected that volumes for the second quarter will still be high. Today, Mark Carney will deliver his speech later in the afternoon, most probably talking about the upcoming inflation reports next week. Moving along to the Asian Pacific area, starting with the Japanese Nikkei 225, 56 points down, and 150 points, even a little bit higher range. An improvement in the labor sector reports yesterday and overall household spendings. The unemployment remains as expected, but the CPI inflation reports came mixed to negative and the yen started moving. To put all that into bips, the Swiss franc versus the yen, 14 points range, 6 down. The loonie yen, 8 range, 2 up. The pound yen, 13 range. The euro JPY, 11 points range, 3 points down in the end of the day. The retail sector reports are due on Sunday, along with industrial production. A very, very good start for the trading week, especially for the yen traders. On the Kiwi front, yesterday the reports showed imports lower than expected, exports better than expected by 10 billion, and trade balance month on month and year on year quite better. As a result, the biggest mover there was the Aussie Kiwi, 5 points up out of 10 points range. The New Zealand building permits are due on Monday, month on month. For the Aussie, on Tuesday next week, new home sales month on month, private sector credit. Thursday, imports and exports along with the whole trade balance report. And retail sales are due next Friday. Moving to the commodities sector, the S&P 500 index had a range of 20 points yesterday, currently very close to 2,100 points. Gold had a range of $8, trading at $11.74 right now. Silver had a range of 17 cents at $15.83 currently. WTI had $1 range at $59.70 now. Natural gas is trading at 2.83 at the moment, range of 11 cents yesterday. The natural gas storage change in the US in the week ended June rose by 75 billion British thermal units compared to expectations for an increase of 77 billion. Overnight, gold inched down, extending a recent slump amid the strong US consumption data and the lack of progress in the Greek debt negotiations. With regards to the crude oil, it had losses below $60 a barrel as near record US production prolonged an oversupply amid the lowest trading volatility in 8 months. Something interesting about Iran, it was grant access so that the United Nations inspectors can verify its nuclear program is solely for peaceful purposes. This is what said two senior Obama administration officials who are close to the negotiations and spoke on condition of anonymity. The deadline is next Tuesday, June the 30th. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day, and we'll catch up again next Monday. Cheers. Bye-bye.